It is Tuesday, January 27th, 2026. And today we are opening the file on an American industrial icon that has spent the last few years trying to climb out of a very deep, very public hole.
We are talking about Boeing.
We are talking about Boeing.
Yeah.
They dropped their Q4 2025 earnings report this morning. And if you only looked at the headline number on your phone, you'd probably think they just pulled off, I don't know, the greatest miracle in corporate history.
It definitely looks like a miracle at first glance. But you know what they say in finance? If it looks too good to be true,
Check the footnotes.
check the footnote.
Right. So Wall Street was bracing for a loss of about, what, 40 cents per share? Just a small expected bleed. Instead, Boeing posts a profit. And not just a small profit, a massive, eye-watering $9.92 earnings per share. That's a beat of over $10. I mean, did they find a crate of gold bars in the factory basement? What is happening here?
Yeah, no gold bars, unfortunately. What you're seeing is a massive optical illusion. It's financial engineering, not necessarily factory efficiency. That profit number is almost entirely driven by one specific event: the sale of their Digital Aviation Solutions business, specifically the Jeppesen unit.
Jeppesen, that's the navigation charts, right? The maps pilots use.
Exactly. It's a very high-margin, software-heavy business. They sold it, and that sale netted them a one-time gain of $9.6 billion.
$9.6 billion.
So if you strip that away, if you take out the money they made by, selling the furniture, so to speak, the earnings look much more pedestrian.
Okay, so they sold off the family silver to pay the mortgage.
In a manner of speaking, yes, they are streamlining. But our mission today isn't to get distracted by that windfall. We need to look past that shiny $9.92 number to answer the question that actually matters to you.
Right. Is this industrial giant actually fixing its factory floor? Are they building planes safely and on time?
Or is this just financial smoke and mirrors? Because you can't sell a division every quarter to make the numbers look good. Eventually, you have to build airplanes.
So lay out the roadmap for us. What are we unpacking today?
Well, we're going to look at the real commercial numbers, the actual metal leaving the factory, that we have to talk about the reintegration of Spirit AeroSystems, which is a massive strategic U-turn.
A huge deal.
And we'll check in on the defense sector, which is still giving them some migraines. And finally, we'll follow the cash. Because they keep talking about this holy grail of $10 billion in free cash flow, and we need to see if that's actually realistic.
All right, let's start with the metal. The commercial airplanes. If I ignore the one-time sale, is the core business actually growing?
It is. And this is the legitimate good news for anyone rooting for a turnaround.
Yeah.
Revenue came in at $23.9 billion for the quarter. That is up 57% year over year.
Wow.
That isn't an accounting trick. That is the sound of assembly lines actually moving.
And I saw a number that really stood out to me. 600 commercial airplanes delivered in all of 2025. That's the highest number since 2018. That feels like a psychological barrier they finally broke through.
It is a major milestone. Getting back to that 2018 level is huge. But the number inside that number is the 737 MX. That is the cash cow.
Of course.
The entire company's health really depends on that one plane. They've stabilized production at 42 airplanes per month, and today they confirmed they're planning to move that up to 47 per month later this year.
Now, I want to double-click on something you mentioned in our pre-show notes.
Yeah.
The shadow factory. This sounds like something out of a spy novel, but it's actually really important, right?
It is critical. Think of the shadow factory as a parking lot full of half-finished chores. For the last few years, Boeing had hundreds of planes that were built before 2023 but just couldn't be delivered.
Why not?
Maybe they needed a specific part or regulatory sign-off or a fix for a defect. They had to spend thousands of hours reworking these old planes instead of just building
Building new ones. It's like trying to cook dinner while you're still washing the dishes from breakfast.
That is a perfect analogy. You're tripping over yourself. And here is the breakthrough. As of the end of this quarter, that sink is finally empty. There is literally only one 737-8 left from that pre-2023 inventory to deliver.
Just one.
Just one. They expect to hand it over in Q1. This signals a return to a normal production flow. The mechanics aren't looking backward at old mistakes anymore. They're focused on the new planes coming down the line.
That has to be a huge weight off their shoulders. But what about the wide bodies, the big international jets like the 787 Dreamliner? Is that line running as smoothly?
Smooth-ish. They're producing at a rate of 8 per month, aiming for 10 later this year. But, and there's always a but, in aerospace, they flagged a specific bottleneck.
Let me guess. Titanium shortages? advanced engine turbines.
Cheek seats.
You're kidding. Airplane seats.
I wish I was. Specifically, new seat configurations that require certification. It sounds trivial, but a modern business class suite has doors, motors, electronics.
Right.
If the regulator hasn't certified that specific configuration, you can have a finished $200 million jet sitting on the tarmac, but it can't be delivered because the seats aren't legal.
It's a reminder that the supply chain is still so fragile.
Precisely. You are only as fast as your slowest supplier.
Speaking of suppliers, we have to talk about the remarriage. In December, Boeing officially completed the acquisition of Spirit AeroSystems.
The boomerang returns.
Right. So for anyone who hasn't followed this whole drama, Boeing used to own these factories. Then they sold them off to save money, and now they've bought them back. Why the flip-flop?
It comes down to a fundamental change in philosophy. 20 years ago, the idea was outsourcing is cheaper. Let someone else deal with the factory costs. But after the door plug blowout and all the quality escapes, Boeing realized that cheaper was actually incredibly expensive in the long run.
If you lose control of quality.
Exactly. They bought Spirit back for one reason: control. They need to be able to walk onto that floor and stop the line if something isn't right without negotiating with a third party.
But this isn't a free lunch. Buying a company that has been struggling must come with some baggage.
It absolutely does, and Boeing was very transparent today. Integrating Spirit is going to be a $1 billion cash headwind in 2026.
$1 billion just to absorb them.
Yes. They have to fix Spirit's machines, retrain their workforce, stabilize their finances. They're buying a fixer-upper because they need the house, but the renovations are going to be pricey.
So commercial is recovering, but paying for past mistakes. Let's pivot to the problem children. It seems like every time commercial gets its act together, the defense side trips over something.
It has been a recurring theme, yeah.
Yeah.
Despite revenue being up, the Defense, Space and Security Sector, BDS, posted another loss, and the culprit, once again, is the KC-46 tanker.
This tanker program feels like it's been haunting them forever. A $565 million loss on it just in this quarter.
Yes. And it's important to understand why. It's not just, oops, we messed up. It's actually it's a strategic choice. They mentioned they're dealing with higher production support costs.
Translate that for us.
It means they are throwing bodies at the problem. They are intentionally keeping extra engineers, extra quality supervisors, and extra support staff on the program to make sure it gets delivered on time.
So now they are choosing to lose money up front to guarantee the schedule.
That's the read. They are eating the cost to save the relationship and the reputation. It hurts the margin now, but it keeps the customer happy for the next contract.
And despite the losses, they are still selling them. I saw they booked 15 new tankers and 96 Apaches in the quarter.
Exactly. The demand isn't the issue. The backlog for defense is at a record $85 billion. They just need to figure out how to do it profitably.
Speaking of things they need to figure out, let's talk about the planes that can't fly yet. The certification cliffhangers. Where are we with the new versions of the MX?
It's a mixed bag, but moving forward, the 737-7 and the massive 737-10 are anticipated for certification in 2026. The big hurdle has been the engine anti-ice system.
Right, there was a concern it could overheat.
Yes, not ideal. But they have a design fix, they're testing it, and they are, quote, following the FAA's lead, which is code for, we are not rushing this.
And the bigger story might be the 777X. This is their next flight ship.
It is, and there was a hiccup mentioned in the report. During a recent inspection, they found a potential durability issue with the engine.
That sounds ominous.
It's definitely not what you want to hear. Now, Boeing says they are working with GE, the engine maker, and they claim it won't delay the 2027 delivery target.
But 2027 is right around the corner for an aerospace program.
It is a very high-stakes race. They are currently in what's called TIA-3 type inspection authorization. That means FAA pilots are on board, flight testing the plane.
So finding an issue now is like your check engine light coming on during your driver's license test.
It creates a lot of stress. They have to fix it, prove the fix works, and finish the tests all within a pretty tight window.
Okay, let's talk money. Because at the end of the day, all this has to turn into cash. Let's talk free cash flow.
Sure. Think of it like your household budget. You have revenue coming in, you pay your operating costs, you pay for capital expenditures like a new roof. Free cash flow is just the cash you have left over at the end. It's the lifeblood.
And how's the blood pressure in Q4?
Positive. A positive $375 million in free cash flow. Better than expected.
That sounds good. But then they guided for only $1 to $3 billion for the full year of 2026. That seems modest for a company this size.
It is razor thin. And this is where we have to talk about the headwinds, corporate speak for money drains. There are two main things dragging that number down. First, customer considerations.
Which is polite speak for paying airlines for past delays.
Bingo. And the second one is excess advances.
Okay.
When times were tough, Boeing asked customers to pay big deposits up front. Now that they are finally delivering the planes, the customers are saying, great, keep the plane, you already have my money.
So it's like working off a salary advance. You're working hard, but the paycheck is tiny because you already spent the money.
Exactly. And they warned about seasonality. They expect Q1 of 2026 to actually be a usage of cash. They'll burn cash before they generate it. So if you see a negative number in April, don't panic. It's part of the plan.
But there is a light at the end of the tunnel. The CFO talked about a $10 billion goal.
Yes, the $10 billion normalized free cash flow. That is the holy grail. To get there, they need to do three hard things. Certify the 777X, ramp the 737 to a rate of over 50 per month, and stop losing money on those defense contracts.
Doable, but not done. So let's zoom out. We've got the CEO, Kelly Ortberg. He had a quote. We haven't fully turned the corner, but we're making real progress.
It's a very measured tone, which is what the market wants.
Yeah.
He laid out a 4-point plan. Stabilize, execute, change the culture, and build a new future.
Change the culture is one of those phrases that can mean anything. Did he give any concrete examples?
He did, and it was a surprisingly specific detail. He mentioned they simplified over 5,100 work instruction documents for mechanics.
5,100.
Yes, these are the step-by-step guides. Over decades, they had become bloated and confusing. By simplifying them, you make it easier for a mechanic to do the job right the first time. That is a tangible safety improvement.
It's the boring work that actually makes the difference. Now, before we wrap up, there was one little nugget that felt like a sci-fi movie teaser, the 6th-gen fighter.
Yes. Amidst all the talk of tankers and seats, Ortberg dropped a bomb. Boeing scored a transformational win on the U.S. Air Force 6th-generation fighter.
What does that even mean?
Details are classified, obviously, but this is the next leap in air dominance. The fact that Boeing is a key player here shows the Pentagon still respects their engineering chops. They haven't lost their ability to innovate on the cutting edge.
A fascinating counter-narrative to the Boeing is broken story.
It's a paradox, but that's Boeing right now.
So let's bring this all home. We started with an optical illusion. What is the real story of Boeing right now?
The vibe for 2026 is the grind. 2025 was about setting the foundation, clearing the shadow factory, deciding to buy Spirit. 2026 is about execution.
And for you, the listener, what's the signal versus the noise?
The $9.92 earnings per share is noise. Ignore it. The signal is in the delivery count, 600 planes. And the signal is in the backlog, $567 billion. The world wants these planes.
Demand is not the problem.
Execution is the only problem. And here's a final provocative thought. Boeing is currently investing billions to fix its past buying Spirit, paying settlements, reworking old planes. These are what I call legacy anchors.
Fight dragging them down.
But imagine 2027 or 2029, when those anchors finally fall off. Will Boeing suddenly spring upward and become a lean cash-printing machine? Or will the delay in the 777X allow Airbus to permanently steal the crown of the wide-body market?
That is the multi-billion-dollar question. Can they fix the ship before the competition sails away? We will be watching closely. That's it for this deep dive. Thanks for listening, and we'll catch you on the next one.